August. Happy 8th, everybody. All right, let's get started with a risk disclaimer. We understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the risks. If you're following me out there on social media, I will say this. I appreciate everyone direct messaging me, telling me how many scammers are out there. But guess what? You can just report them and flag them and try to get them kicked off social media because that's exactly what I do. So if you're really following me, these are my handles. YouTube.com/Chris Pulver. Everything else, real Chris Pulver. Not official, not numbers, not underscores, and there's no soliciting on my part. All right, I'm not going to message anybody telling you about some crazy crypto deal, scam, whatever. It's not me. So please continue to flag and report. And if you follow me, you follow the real me. Otherwise, just join me on Mondays and Fridays on my YouTube page. Let's talk markets. Okay. All right. Happy Monday, everybody. Nice to see everybody. We have the economic calendar up for this week. Big news as far as high impact. Wednesday will be what the markets are probably pretty interested in. It's a fairly light calendar for the week. I think we have U.S. politics taking a little bit of a recess after a busy IRA, Inflation Reduction Act, which in turn does nothing to actually lower inflation. But it's a healthcare bill, tax overhaul, and energy overhaul. But call it something else, I guess. So CPI numbers come out on Wednesday. We are going to see if the year-over-year numbers are higher or lower. We saw this in July, and it showed that we were sitting at a year-over-year 9.1% change, so 40-plus year highs in the U.S. for inflation. We'll see if the data starts to come down. We know that core inflation metrics have decreased while headline inflation has stayed relatively high or higher. So this is Wednesday, 8:30 a.m. BOJ holiday, pretty light calendar, like I said, overall. PPI for the U.S. on Thursday, unemployment claims for the U.S. on Thursday, GDP for the pound on Friday, and University of Michigan sentiment survey or sentiment report on Friday at 10 a.m. Anything else that sticks out with low impact, let's just double check, and then we'll review everything for where we're at for the year. Lots of low impact news Monday and Tuesday. Lots of low impact. Yeah, it's mostly low impact, but still, it's August. We're right in the thick of things as far as this kind of August summer low volume transition. We'll be watching the markets. Meanwhile, this is probably a good thing for the U.S. stock markets. We've had a nice recovery. Where we are at for the year, last week was pretty mixed. The Dow was flat, negative 0.13. S&P was up barely, 0.36. NASDAQ was up a decent amount, tech leading the way. We are, kind of debating on whether tech or the NASDAQ is back into a bull market as they've rebounded 20% off the lows. NASDAQ was up 2.15% last week. Bitcoin still hanging up above 20K. Closed on Friday, 23,159. Still down for the week, though. Here's where we're at for the year. Like I said, despite the 20+% rally in the NASDAQ, they're still down 19%. Same thing with the S&P. Despite being down 24%, they're still down 13%. That's after a 14+% rally. NASDAQ's 20+% off the lows, but we're still red for the year. I keep having this discussion. I talked about it last week in my sessions. Are we going to see, the markets fighting back this year, and to what extent? Are we fighting halfway back? Are we fighting all the way back? Are we going to see a September midterm election uncertainty slide? Are we going to see additional geopolitical tensions kind of derail the markets right now, or not? I'm trying to look at the charts and just try to follow price and be positioned for proper hedges. If the market wants to drop, I want to still make money. If the market wants to go up, I still want to make money, right? Trade our technicals in Forex, commit to the process. So we're still down for the year. 10 years off the highs, 3.4, 3.5. It's down to 2.8, still up for the year. Bitcoin still hanging up around that 20,000 level. There's room up to close to 30K as recovery, but it still paints a fairly bearish picture in the interim. I've been saying the last probably 2-3 weeks now, look at the strong correlation between the dollar, Bitcoin, and the S&P 500. If the dollar weakens, it paints a good picture for equities to continue to rally, and Bitcoin recovers as a risk asset. Netflix has had a really nice recovery. This is on here from Morning Brew. Still 60+% off of the highs, but has recovered a pretty decent amount with lows like 170. Now it's up to 226. Last week had a really nice profit called away on MicroStrategy. Actually bought some shares in the 500s. Thanks to options, lowered my cost down to 260. Got the stock called away last week for 300 bucks. Could have dragged the cost down to like 252 or 251. Kept the covered call out to this Friday at $300. We're trading up to 335 right now. But in the spirit of safety and taking the profit and getting some margin back, I just went ahead and had the stock called away with a covered call. So nice profit on that. I'll be looking to add some additional covered calls this morning. Alcoa looking to continue to repair and lower my cost. Halliburton, same thing. These are all stocks that I'm pretty close to the current price as far as break even. So anything that I'm taking covered call, if I did a $28 covered call on Halliburton or a $29 covered call on Halliburton for this week, hopefully I can lower my cost by another 30-40 cents. And if it gets called away, nice little profit. So that's what we'll be doing this week in Equities on Demand, is just repairing. You don't have a ton of 8-12 expirations, which will be Friday. Also, something notable this week, if anyone's checking it out, I will be in the trading battle this week. Let's see if it's popped up here. All right, so Battle 76 is happening this week, and I will be in it along with Dave Floyd, hosted by my good friend Jared Johnson. So we're going to have some fun this week. Should be like 7 p.m. Eastern time. This will update here in a little bit once they officially push out the pre-battle. So that'll be this week on Thursday. So we'll have some fun. And the team does a great job. Hopefully you all can check it out. If you have any requests, let me know. I'm going to get logged into YouTube and say hi to everybody. See who we've got. The gang, the fam, the usual suspects. Let's do it. All right. So Jason in the house. Morning, Jason. Donna's here. Susan's here. Herbert's here. Ken, good morning. What's up, Ken? Haven't seen you in a while, man. Hope all is well. Joe's here. Stone's here. Wayne and Gary. Good stuff. Daniel's here. Steve is here. Sterling, Brad, good morning. Gail, good morning. Donna, what's happening? 10 likes. Yeah, looks like we've got some more now. Craig, good morning. All right, nice to see everybody. Okay, so I'd like to take a quick peek at pre-market. SPY is due to open about $1.50 higher. DIA due to open close to $2 higher. The Qs just shy of $1 higher, about 80 cents. So let me just really quickly review something. I talked about this last week in my trading rooms. I'm kind of painting a technical picture for the remainder of the year. If you recall, let's go back to see if I have a screenshot of this. Is it in here? There it is. Okay, I'm just making a quick reference to this image. This is 1962 S&P 500, 1970 S&P 500, and then present. Okay, so 1962 at the top, 1970 in the middle, 2022 in the bottom. What we have seen thus far in 2022, as far as the July recovery, is we're sitting here off the lows. So the next phase, are we going to continue to work up with higher highs and higher lows, and the market is forward thinking? This Wednesday with inflation numbers, we'll see what the market's reaction is. Or is it going to be a bit of a dip that is offered after this week? Okay, 1970, again, why did I pull this year? Well, happened to be a terrible first half of the year. Same thing with 1962, and they both had midterm elections, which is what we have right now. Now, do we have the same geopolitics? No. Do we have the same inflation going on? No. It's arguable. Not really. Do we have the same situation? No. But as they say, history often doesn't repeat itself, but it rhymes. That was Mark Twain, right? So 1970, we had higher lows, higher lows, higher lows, but we had dips along the way, all the way into August and September. But the market continued to fight and get all the way back up and finish positive on the year. Positive by literally 0.1%. Okay? But if you're 25% down, it's a 30+% rally to get back to those highs. Now that's on an index. right? Individual stocks we've seen already. If you bought, MicroStrategy at 145, 150, it's up to 330. That's 100% plus. Netflix, it's already, 40, 50% off the lows. So there are opportunities if you're able to have some shares now, if you're not in too much trouble from the first half of the year. But I'm really curious to see how the remainder of the year plays out. I think that, obviously traders and investors are dealing with a lot of noise, a lot of uncertainty, but you have to remember sometimes the markets don't care, right? Sometimes the markets are so much forward thinking. This is probably the most important thing to watch for the rest of this year. What is the Fed going to do in September? Because right now, we talked about this last week in the trading rooms, if the Fed continues to move the target of where they're going to be with their 2-year yield, with their 3-month yield, do we still have an inverted yield curve? Is the Fed going to have to raise interest rates more aggressively past the target that's already been priced in at 3.5%? I think that makes the market think differently. But if the Fed rate is priced in by the market, I think the market ignores a lot of stuff. It ignores China, Taiwan. It ignores Russia, Ukraine. It ignores inflation. It ignores a lot of things, and it just keeps moving forward. Okay. We also know that the stock market is not a reflection of the real economy. So we can have a contracting labor market, a tight labor market. We saw that last week we had non-farm payroll that printed, way more than expected. Unemployment rate went down. Average earnings were up and revised higher, but there's still people not working. Jobless claims are still increasing. Okay, savings are at probably 30, 40-year lows at this point. So things are getting tighter for the consumer, but that's what's also allowed inflation and core inflation data to come down. Gas at the pump is going down. All right, real estate going down. People are cutting their sell prices, and the fixed mortgage. If we go to daily, it's Mortgage News Daily. The fixed mortgages for 30 years sitting at 5.45. I saw last week that this is actually close to dipping in some areas, dipping below 5%, which could keep the real estate market pretty safe for right now. I mean, again, 5% is still like historically low considering the last, 40, 50 years. But what in the last 20 years, well, at least the last 15 years, since 2008, 2009, when interest rates got to dirt cheap, 4%, 3%, we saw sub 3% in 2020. It's hard to look at it now and say, well, I mean, it's up almost 100% from where it was before. It almost doubled. Yeah, I know. But gotta get in while the getting's good, I guess. So now it's more of a new reality. So my point is, inflation is going to be a big deal. It's going to be sticky. What the Fed does, I think, is where the bigger macro movement's going to be for the U.S. markets. Okay, China's still a wild card. They're having some issues with banks. They're having some issues with savings. They're having some issues in real estate, but they still have animal spirits and they still have fiscal and monetary policy. The U.S., I think if the Fed doesn't move the target again to the upside and be more hawkish, I think the U.S. markets continue to fight back for the rest of the year. But this did change. The reason I'm showing you this is this did change from last week to 2 weeks ago to last week. The Fed is now anticipated here. This is the CME Watch tool. The Fed is anticipated at a 75 basis points hike going into the September meeting. Now, this is not until the end of September. So we still have inflation data coming out this week. We'll have inflation data coming out in September. We'll still have, post-summer trading as most, trading in full volume resumes in September. Whether that's good or bad, usually the markets are slightly bearish in September as the September Fed kicks in. But this is what we're going to have to deal with. So like I said, I am positioned for whatever happens. If the stock market wants to drop, I'll be hedged. If the stock market wants to rally, I'll be protecting and lowering cost basis and trying to run with current prices. But what I will do is I will continue to be very active in reducing my costs and trying to run with profits to the best of my ability and try to keep the quality portfolio of stocks that I want to own. If I have things I'm trying to repair, that's what I'm doing. I'm not looking to hang on to everything I own. I'm trying to clean up the quality of the portfolio and let it run. Okay, so this will be what you watch. Watch the Fed. It's annoying, but it's true. What the Fed is doing is what the market is ultimately pricing in. Fed wants to get more hawkish, market's going to price that in probably to the downside. Fed wants to get more neutral to dovish to accommodative to growth oriented, market's going to love that, and it's going to start pushing things higher. regardless of the geopolitical scene. Okay. So this is probably the most important thing to watch. What's been frustrating about this year is how uncertain it has been and also how much it's changed. It's probably changed 3 to 4 times dramatically from the market having to like reprice everything that they think the Fed is going to do to where the Fed's going to be to how the Fed's going to get there, how quickly the Fed's going to get there. All these things have been changing. Okay. So that's how we kick off this week. Not a ton of news, but the major news will be Wednesday's inflation data. That is 8:30 a.m. Eastern time, right here. Wednesday, 8:30 a.m. As far as currency strength this morning, we have the Aussie and New Zealand leading the way. The CAD's making a run. Swiss is neutral. Pound followed by your kind of your safe haven pairs, your euro, yen, and dollar on the weaker side of things. A decent amount of volatility to kick off the week. Do we have a bunch of news that's going to drive volatility this week? No, not so much. But if you remember last, what is it, 2, 3 weeks ago, I think on the 21st of July, we had that inflation news, and it was a wild day. So I would kind of imagine with thinner markets in August that we might have a wild Wednesday. So again, just be ready. That's all. Anything else? Headlines are going to change every single day. Bulls and bears. Nobody's really clear. The outlooks and analysis is all over the place. So I just trying to stick to the charts. On the chart. Speaking of that, I did say for the last couple of weeks, now that we've crossed above this 50 period EMA, coming into this 200, we do have some past support. We do have some past resistance. The bear market situation could be true, okay, but I'm not really convinced that the bears are in control unless they push price back down below this recent low and back below the 50 period EMA, right? If you think about, just if you watch trends, when the trend goes up, the trend goes down. Let me just draw this out on the charts for a second. So if I get into some white space here, check this out. So if you have price, and I'll use a straight line for price, and then use a freehand tool for EMAs. So if you have prices making higher highs and higher lows, okay, and then we start making lower highs and lower lows, typically what you're going to look for with crossovers and just very basic stuff. You can have a 50 period and a 200 period, right? Those are your most common institutional ones as far as major support, major resistance. Where's the trend going? What's a bull market? What's a bear market? So if I have a 50 period, that's going to be moving a little bit more aggressively to price, okay? And then we cross over that. And then I have a 200 period that's down here that moves a little bit slower. If the 50 period crosses over that 200, that's what gets us into our, technically our bear market, right? So you're buying dips, you're buying dips, you're buying dips, you're buying dips. When the market crosses over, this is usually a stay out zone in between, right? And the same thing is true here with the current price. I think right now we're kind of in a wait and see. We're in a bit of a stand aside, because if the markets can close, let me change the color here. If the markets can close higher, bulls are in control above this 200 EMA, okay? And the bears are in control below this 50 EMA. Because we're in summer trading, because we've already had a nice little recovery, I could see this area consolidating for the next couple of weeks, right? Is there going to be some major news that drives it higher or lower? Possibly. That's the excuse the market always uses. What's the news? What's the catalyst? What's the fuel behind this move? Okay, but if we go sideways for a couple of weeks, I need to wait. I need to wait to see how I can get positioned. I need to be ready and braced for more downside if we break out here, and I need to be looking for ways to manage profits and repair my portfolio and clean it up with quality stocks that I want to own if we're going to continue to fight back and get back to this high and maybe even make a run towards these highs to the end of the year. Okay. One thing that was a pleasant surprise last week was earnings. We did have relatively decent earnings considering I've been kind of warning that we might have an earnings compression. So I think companies for the most part fared pretty well. And whether they beat on all lines, like top and bottom, some beat revenue but missed on earnings per share or vice versa. So we just have to watch the technicals. Okay. Moving the JPY pairs on US news. Yeah, I mean, look, I just think in general the JPYs are pretty sensitive to a lot of stuff right now. They're sensitive to CPI, they're sensitive to risk appetite or risk aversion. Um, there's going to be volatility on the yen crosses regardless, especially after this year's trading. There was so much volume and momentum that got put into yen crosses It was that potential carry trade. It was that potential runaway trade. It was potential, BOJ being very, very dovish and accommodative with their bond buying program versus other central banks, which are tightening right now and raising rates. So I do think there will be a technical rebalancing on the JPY. That's why I think they're also very sensitive. So I just don't know if we're going to see it now in the month of August. Are we going to see it in the month of September, October? I'm not sure. But when we have high bar counts and extremes and inefficiencies and it's in the forex market, I still think that those technicals really matter. So I continue to, scale out what I need to scale out, scale back in and confirm when things line up nicely. And yeah, the JPYs are going to be a bit of a fight this year. But I still think they will, if again, you give yourself enough time, I think the JPYs are still going to find balances. Dollar yen, for example, we're trading here at 134. We came right up to that monthly pivot for August, and we've had that moved similar to what we saw in oil. This move right here below the 50 period on the daily chart. If this is a high to low, I'm looking to see, do we have another driver to push this down into a lower low? Challenge this level, find this EMA support right around 128 to 126. Does it fall faster? I've looked at higher time frame patterns on the weekly and monthly that also suggest something like this. You measure this move right here, okay, and you match that up here, and you have a flat pattern or a big channel. So you connect the lows and the highs. And is this a range? Are we due for a top on the dollar yen? If we're due for a top, does it come all the way back down here to where this broke out at 116? Does it come all the way back down here to the breakout point in the yearly pivot at 112? I don't know. A lot of traders right now would say, like, that's impossible. That would never happen. You never know. Did anyone expect the dollar yen to go from 127 all the way back down to parity after it was the easiest trade for 2,000 pips or 3,000 pips straight up? Well, it's done the same thing again from 103 to almost 40. I mean, that's a 3,700 pip trade. Okay, with a little bit of rebalancing. So yeah, we've got to watch this stuff. Okay, all right, let's take a quick look at dollar index, oil, gold, silver. Dollar index 12,935. Here's the daily time frame. If we're using that August pivot as resistance, it's right there. So do we have a slide into this July pivot just shy of that? Came back to hit the August pivot. If this becomes resistance, if this high holds, high to low, lower high to lower low. If we have a correction phase on the dollar that's still going to play out, find this bar count. This is where I think the dollar has to make a big decision. If we have a correction, okay, is the dollar going to get a lot of love in the future, or is the dollar going to break down with the market knowing, like, hey, the Fed's not going to raise rates past a certain point. They're not going to be the strongest, currency in central bank. Inflation numbers are coming down. Risk appetite is coming back. And that's where I think this becomes a breaking point for the dollar. If risk appetite is strong, the dollar will weaken. If risk appetite is strong, the dollar weakens, equities rally, Bitcoin probably has a recovery coming. But that alignment is going to be contingent on what the dollar does. So right now it looks like this August pivot would be a great spot for resistance. I'd like to see it hold. What I'd like to see price do in the next couple of days, maybe even this week, is make its way back down into these lows, into the right side of this trend line, and looks like we have some open space to correct back into that 200 EMA. I've used this as a comparison this year, but when we had kind of runaway oil, same type of thing. Oil was very well supported for months and months and months. And when we finally made that break below the 50 period, right there, high to low, lower high to lower low. And this will be a really interesting week on oil as well. We did hit that corrective symmetry from this high to low, lower high to lower low. So does energy get a pop this week? Maybe. Maybe it gets a pop because of CPI that comes out on Wednesday, whether it's positive or negative. If it's high and all of a sudden we're like, oh, there we go again. Headline inflation, 9.2% in the US. It's worse. It's high. It's higher than before. Okay. How does that affect energy prices? Probably going to bump them. How does that affect risk appetite? It might curb it a little bit. We've had a nice little recovery off the low since July. Okay. But I will be watching oil this week. I'll be watching crude oil futures. I'll be watching copper this week. Let me take a look here. Let's go trend line. Something like that. See if this plays out right in there. Okay, so potential channel on oil. Let's take a look at, let's see, HG, should be copper futures. Copper is off the lows after 30+% decline. Go to the higher time frame here. You know, I'm not saying that copper can't go lower, but we do have a nice little midpoint of this channel, if you can see that. So resistance at the high, at the low, connect that, create a channel. The midpoint would technically be running somewhere here in the middle, okay? But past resistance becoming support is that horizontal line that we bounced off of. This is also after highs and a 30% drop, 30% drop, 30 to 40% drop. Okay, all these have kind of correlated interestingly with 2008, 2020. There's your COVID low drop right there. So if copper holds, you know, we look for a reversal pattern like a cup and handle. A bullish cup and handle would be a pretty strong bullish signal. If copper goes back up, then we're probably going to see some equities rally. Gold and silver. Gold has been moving pretty much in line with the dollar, inversely correlated. So dollar weakness is showing gold strength. So gold's had a fantastic reaction off the lows here around 1670 to 1680. Gold is trading up $100 off those lows, and I'm looking for more, hopefully to the upside. This translates into GLD. We started throwing some trades in around 160. So far, so good for some credit spreads and some long calls around those areas. XAG, silver also moving nicely off the lows, looking to see if there's a continuation to the upside, and SLV correlates with that. Off the lows, we're trading at 18.8, and we have some credit spreads at the 17, the 18 by 1750 or the 18 by 17s over the next couple of months. Bitcoin and Ethereum, take a quick peek there. 24,042 on Bitcoin right now. My only concern, and this is what I've been just trying to make traders aware of on the technical side, you know, you can see that Bitcoin could fight back in here, right? We could have this kind of channel recovery. My concern is that this low or this past level of support in this breakout around 30,000. Look, Bitcoin could still recover to 30K and still be met by a lot of dynamic resistance. We could hit this past support, become a resistance right around that 29 to 30,000. And, you know, bear flag. I could see us recovering, but I could see us also using this as, okay, resistance is very firm right here around 30K. If we come all the way back down to the lows again, you know, this is that 20K support. Could we range for a longer period on Bitcoin? Could we have a 20 to 30K range? Very possible, right? I know everyone that's a Bitcoin enthusiast is cheering it on to infinite highs. If there's any, you know, Bitcoin haters and skeptics out there, you know, it's a Ponzi scheme, it's a joke, it's a blah, whatever, then sure, you'll cheer it on to zero. But for the most part, it's gonna be something we have to watch. I think that the bulls are gonna have to overtake 30K. If they don't, I think 30K is gonna hit resistance, and we're gonna find some supply and demand areas. And this might be a trader's market. You know, maybe you want to buy it at 30, take some profit. Buy it at 20, take some profit at 30. And maybe this lasts for the next 1 to 2 years. Okay? But right now the bulls are not giving me any evidence that they are in full control. So this to me still has a recovery and correction written on it, not so much a bull trend. I'm happy to see it's not going lower, but it doesn't look like a bullish trend at this time. It looks like it's still in a correction phase trying to figure out what's next. Here's Ethereum. So Ethereum has made a slightly better run, right? We're above the 50 period. We're coming back up into those pockets and inefficiencies. We are closing back above this past support, so that's a good thing. Do I think there's resistance head in Ethereum? Yep, right here. Right here between 2,000 and 2,200. So if this runs up to that level, hits resistance, and starts to fall back down to where? higher low? Do we have Ethereum with a low here that's going to carve out a higher low? Possible, right? So if we go from a swing here, pull back, and another swing, sure, let's chew up some of these levels. Let's find some of these pivots. Let's make our way back up to this high. Could be exciting to see, Ethereum outperform Bitcoin. You can compare them. You can look at Ethereum versus Bitcoin and see that it has been, right? Over the last 2 months, Ethereum has definitely outpaced Bitcoin. So another potential pattern. Watch this high. It's not a very good line there. Watch this high. Watch this high. Watch for a high to see if it's slightly higher or if it's head and shoulders. If this is a head and shoulders move, then we pull back, have a right shoulder, and then we're looking for price to break above that neckline to go higher. And again, maybe that is Bitcoin outperforming, or I'm sorry, Ethereum outperforming Bitcoin. We'll find out. Okay, so there's some fun in crypto. Bitcoin, Ethereum is pretty much all I'm watching. We are keeping our eyes on some exotic pairs. Last week, I threw in a pending order on the Turkish lira at 17.7. Still hasn't been filled. Okay, so that's a stop sell order that has not been activated. So I'm going to wait, go after about 6,000 pips on that Turkish lira. We're coming up into these, flash crash highs around 18.2. I don't know if I'm going to make an adjustment. This recent low is around 17.8. I might bump this up to 17.75 and still go after the same profit target. That'd give me 6,500 pips of profit, which again, nothing crazy. Could I go after a bigger target? Sure. If I could go after, 10, 15, 20,000 pips. But if we get a move like this, where it just drops for 2 straight days, this is an exotic pair. Sometimes it can be illiquid. The spreads can be quite high. And if it moves aggressively for a couple of days, I want to make sure that I at least have a take profit in there from my broker. So I'd be happy with 10,000 plus pips. I've got a target set right now around 6. Okay. All right. Any chart requests? Any stocks you want to take a look at? Any currencies, FX pairs you want to take a look at? This week in Equities on Demand, we're just going to review the portfolio. I did this last week, so I'm going into from top to bottom. Some of these are, the 8.5 expirations, so MicroStrategy was called away for profit. I'm going to look for my 8.12s. I've got an Alcoa 8.12 expiration. KWeb, MARA, those are all added covered calls. FXI, I'm going to add a new one. Halliburton, have to add a new one. Uber, I might lose Uber this week for profit. I think, unless it dipped last week. No, Uber's running hot. So, I'm either gonna roll it or I'm gonna try to roll it up by maybe 50 cents to $1. Even if I have to pay a small debit on that, it's kind of worth doing. I've drilled my cost down to Uber to like $27 and change. Dollar yen, we can do dollar yen Ford. Yep, let's take a look at both. All right, Ford, ticker's F. We're trading at 15.68. I do have a covered call on Ford at $15. I think I pushed that out to September. I also have a $14 covered call that I'm probably going to end up rolling. We'll talk about that more today in Equities on Demand. Let me see here. So I have the $9.16, $14 call, and $15 call. My break even's $12.86, respectively, on my different accounts. So if I get it called away at $14, it's $1.14 a share. More than likely, I'm going to do some work on that. Either I kick this out later and drill the cost down by another dollar or so. So maybe I can get it called away at 14 or 14.50, and I drill my cost down to 12.50 or $12. And then the $15 call right now, it's trading at 15.74. I can try to do the same thing. Maybe roll this up to 15.50, maybe roll it up to $16, try to get a few more cents to it to lower my cost. So technically speaking, I like where Ford is at. I mean, even if we have dips, I will say this, it's a quality stock, decent dividend. As far as major player in autos, there's clearly consumer demand. As we possibly improve the supply chain, as we have more semiconductors, maybe there's a little bit less friction in the global economy as far as, getting chips for computers, getting chips for cars. And, look, I don't think that the automaker market is just gangbusters profits. Okay. I mean, 2020 to present has been like this pretty insane time for automakers, their margins, their demand. I don't think anybody has wanted cars more so than what we've seen in the last 2 years, you know. But at the end of the day, there's only so many drivers to go around, and there's only so many vehicles to supply those drivers. So if all of a sudden automakers are trying to make more inventory, all that's doing is making it so you don't have to put down a stupid deposit just to buy a car. If you want a new vehicle, you can actually test drive one on the lot. instead of like, well, we're getting one in off the assembly line in a month. You can lock your spot by giving us $5,000 today, and we'll lock it in for you. It's like, what kind of business practice is that? So my point is, do I think Ford is going back up to all-time highs? Maybe over the course of the next 12 to 24 months, sure, but we're not done with potential supply chain issues. Um, and what we might see is finally a lull in demand. If all of a sudden we don't have money sitting around and nobody's taking out loans on their house, their home equity, then they're not buying new cars. And if we see a little dip in demand, well, then there might be an inventory pileup, similar to what we're seeing in retailers. Okay, Target, Walmart, inventory pileups, discounts. Maybe you'll actually see a car dealership commercial that says, hey, here's a sale. You haven't seen that in 2 years. So do I like Ford? Yeah, it's one of the automakers that I've had really aggressively owning since 2020. Do I think it's going to be, $100 a share? Probably not. I think their liability is pensions, right? Fixed income. They got a ton of debt when it comes to what they owe their employees. But I also think that their electric vehicle portion is going to be pretty profitable. And it's also a pretty inexpensive stock. I would rather trade Ford than trade Tesla right now. Tesla's going to be more volatile. I get it. Tesla could offer that dollar per share move, but if I wanted lower volatility, safety, a decent dividend, I'll go Ford all day. Honda Motors isn't a bad one either. HMC. Okay, we're trading at 25 and change. Toyota's a bit more expensive. Toyota is TSE or TM, sorry, and TM is, but it's expensive, right? 156. So we're starting to dip a little bit. We've got good levels of pass. I mean, look, if Toyota dips down to the 140 level, I'll probably put in some numbers, put in some trades. But Ford right now is a pretty good one. What I'm going to actively do on Ford is, like I said, I have owned shares. I have covered calls. I'm going to move those covered calls either up and out, or I'm going to do what I can to lower my cost basis. But I probably won't be able to hang on to Ford without taking either a loss on the covered call just because I want it to be uncovered, or I just have to pay a debit to have the profit price pan out. But stuff we can talk about in Equities on Demand. Okay, but I do like owning it. I'm glad I'm in Ford. It's inexpensive. I did get rid of some Ford when I bought it at $4.75 when it came up to $24. I got rid of it, and I started getting back in around 15. Lowered my cost basis back down to 12 and change. So it's just, again, trading stocks, trading options, and adding some of that extra agility and maneuverability in your portfolio. Dollar yen. Let's take a look at dollar yen. So dollar yen bar count still remains extremely high. This is the daily time frame. Technically speaking, I'd like to see if this August pivot will hold as resistance. If we have high low, lower high to lower low, that lines up pretty nicely. In fact, let me measure the symmetry really quickly. Now, I'm not saying that this has to be the high. If this isn't like the recent high, maybe it goes up again. I'm not sure. Okay, but if we have a high to low move right there, let me draw a box around that. So if we have a high to low move on the dollar yen and we have a symmetrical lower high to lower low move on the dollar yen, interesting how that comes right back into these lows around 127 and lines up right in between my dynamic support of this 144 and 200 EMA. So could I see that playing out technically? Yes. This is what I've been talking about for the last several months. It's a high bar count. Did it blow through the levels that I thought 120 was going to be decent resistance level. It wasn't. 140. Did it hit 140? Not quite. So if we're going to start seeing more downside with a weaker dollar, it makes sense that we'll see dollar yen correcting back into these lows around 126 or 127. Could it go lower than that? I'd love to see it go lower than that. But if we come back into symmetry or this 200 EMA, it is in my best interest to be protecting my profits on my short positions. If I put in a trailing stop loss and it goes lower to 120 somehow or 118 to this breakout point, fantastic. But what I don't want to see happen is go from high to low, lower high to lower low, and then it goes back up to 140. And somehow I'm like, oh, I didn't protect my profit. Now what? If it comes down to these rebalancing levels, we have to be protecting profit. So that is going to be my plan. And right now, traders know this in my flex room. I'm short dollar yen, I'm short Swiss yen, I'm long Aussie yen, and I'm long euro yen as a hedge. And I'll manage those. I have some dollar exposure, dollar Swiss. I'm long. That's a hedge against my euro dollar. I'm long New Zealand dollar. I want to get long dollar CAD. If dollar CAD comes into the 2600, 2650 zone, I like dollar CAD long. So we'll keep an eye on this one. There's a really nice bearish candle on this today. I think the dollar CAD is a good one to look at some direction this week. We'll talk about it more in Flex, but dollar CAD looks good for some continuation to the downside. Let's find this pocket back around 126 and change. I think we find that area 126.50, 126. Look for a buy trade. Take it right back up into support or take it back up into these highs because it looks like we have a nice little channel starting, right? We can buy low, we can sell high. So that's the setup I'm looking for on dollar CAD. If we get a chance to trade it now, if you're interested, it's a little noisy, but a sell trade here with a stop above the high last week could provide a nice little reward to risk that's pretty favorable. So we'll talk about that more in Flex. Okay. One last thing that I'll leave you with before I start class at the top of the hour for Equities on Demand. If anybody is interested in some trade alerts, you can get some free trade alerts, my top weekly picks in my newsletter, pulverreport.com. Right on the front page, just subscribe to my weekly newsletter. If you're interested in any systems and strategies, every Friday I'm reporting how some of my robots are doing. Pockets Pattern Pro, and Perfect Storm continue to be awesome full auto strategies that make some really nice pips. Right Trader is a great dynamic trend system. You find the trade, you deploy it. It's an awesome robot. Price Action Pro, you can trade anything. You can trade support, resistance. You can trade ranges. You can trade breakouts. You can trade, grids, levels. Pretty cool stuff. So anyway, just check it out. Pulverreport.com. Systems, trading rooms. If anyone's interested in trading with me live, you want to do it for the first time, make it a pretty low cost. It's $27 for the first month. You can try it, trade with me live, make a few pips with me, make a few bucks with me, and hopefully enjoy it. So that's why I'm here. All right. All right, traders. Any questions for me? We good? Otherwise, I'll let you go. Let's have a good week in the trading rooms. Monday through Friday, Equities on Demand. Tuesday, Wednesday, Thursday, Flex. And I'll see you back here on the YouTube page, youtube.com/Chris Pulver on Friday morning at 9 a.m. If you would also kindly attend Thursday, thetradingbattle.com, myself versus Dave Floyd, hosted by Jared Johnson, sponsored by 8cap. Those are a lot of fun, and I'm looking forward to that this week. And before you go, if you would hit that thumbs up button for me, we got a nice little percentage, right? So everyone watching, nice little thumbs up percentage, and let's saturate that thumbs up button. Let's support the YouTube channel and the algorithm. All right. Nice to see everybody. Thanks for coming out on a Monday. Let's have a great trading week, and I'll see you back here on Friday. Okay, take care, everybody. Bye.